Thank you, Ray, for agreeing to come on. I know you're busy and really appreciate you coming on and adding some value to our group here. So our group is mainly real estate investors or people that's new to it. We got a lot of people that's been in it a long time, but a lot of it's based around real estate. And then here lately, there's a lot of crypto focus as well. So
just my people.
Yeah, so I know you've been in real estate, but and now you're in crypto. So if you would maybe just give us a quick introduction kind of your background, and then we'll get into really want to talk about cash flow in crypto and the similarities of that with real estate as well.
I'm from Cuba, born and raised, lived in Miami my whole life. Then got a corporate job with GE, did a lot of that stuff on their financial management program. So got well versed in CFO training and stuff like that. Quit that and then started buying rentals, long-term multifamily in Connecticut. And I'm a Florida boy, so I moved back down to Miami, lived down there. But in Miami, I couldn't buy in whole properties, couldn't buy in whole rentals. The rates were, this is 06. So I started learning how to flip and wholesale and do that kind of stuff in Miami and built out that business there. Kind of through 08, 09, got burned, saw the cycle coming. Luckily didn't have a whole lot, so kind of made it through that cycle. And then retired for a couple of years, still did some deals here and there, but just I got burned out from that market downturn. Met my beautiful wife. We have a podcast together you guys can follow. It's called Both on Board. I'll put it on there. We might be launching season 2. So we wrapped up season 1 before COVID. And then her and I started, she was a school teacher. Then her and I started wholesaling properties. I was doing that on my own already from 06, 08, but then when she came back around 2010, 11, we got back in. Started wholesaling REOs, started fixing and flipping, started building a portfolio again. This time with the team, we scaled that out, hired acquisition people, office administration, property management, project management. So we were doing buy and hold, fix and flip and wholesale. This kind of got us through to like 2018, a combination of those things, buying the rentals and all that. And then 2017, 18, we had my daughter in 2016 and my wife said, I'm done. And then left me to manage the team. I didn't want to do that anymore. So 2017, 18 was a transition point. We pivoted, sold all the rentals, stopped the wholesaling, stopped the fix and flip, and then got into lending. So we became a hard money lender, grew that business out. I'm not here to impress. That's not my style, guys. These are facts. We've been able to pivot and grow multi-million-dollar businesses in each one of these ventures. It was wholesale, multi-million dollars. I mean, hundreds of houses, fix and flip, hundreds of houses, loans, hundreds. Right. And same thing with the multifamily game, right? One of the things we're going to do well as a team is pivot and learn new skills. And part of that comes with sucking, right? You just suck at first, right? Just is what it is. I just embrace the suck, whatever it is I can learn quickly and bank on myself. And to fit the lifestyle, the goal was always cash flow, right? Throughout all those learnings we've had, it was a lot of work. And we were always looking for the mystical unicorn of cash flow. And, the rentals sounded very, very well. And I've got a strong financial background. So we had numbers in house. And by the time you add up the rentals and add all the expenses and the brain damage and you lever up, the guys that really had a lot of cash flow in that game and lifestyle were guys that owned the properties free and clear or had massive, massive scale where there was enough cash flow, it didn't matter. But, when you were playing at my level at that time, which is maybe 100 units all scattered throughout Miami. And sure, we had bigger multis outside of Miami, but again, the cash flow wasn't relevant. Even now, when we've got 996 units in Indianapolis, and we've got another 60 units we just sold in Atlanta, the cash flow is non-existent. I mean, I've got 1,000 units, guys, 996 units in one location, and we do not pay out returns to investors. Just because, 10% of the people say, hey, we're not paying, and you levered up 70, 75%. You're not able to pay distributions. You got a couple of turns to do and you look in the renovate, you just can't pay them. And everybody gets that, right? So we're constantly looking for the cash flow and we realized rentals didn't get there and the fix and flip was the job. The hard money we did well, right? Because it gave us the lifestyle. I'm a big lifestyle guy. But again, it was hard to build wealth with the hard money business because you never get any of the upside. So you're in first position. We didn't do any second loans or get cute with that. We just did first, traditional hard money. Most of our own money. Sure, we managed some other people's money, but most of it was ours. And again, part of that, I didn't want the brain damage managing other people's money. So you can see how the choices I'm making for whatever it is are to optimize lifestyle and to optimize time so then I can then do what I really enjoy with my time. So come COVID, we've got a lot of money out on the street with the loans. My wife tells me, hey, listen, let's leave Miami. Miami's getting crazy. Let's go for a month in a whole bunch of different cities throughout Florida, live there for a month, a bunch of different beach towns, and see where we want to live. And we ended up, in Naples after 4 or 5 months. But before we left, she got pregnant with my second baby, so that was great. As loans started getting paid back, we said, I don't want to do this anymore. We started looking at new things, and I'm a cycle guy, so I'm not Johnny Newcomb lately. I've been here 16 years, and I'm not known because I don't want to be known, right? There's a lot of guys that know me, but the good thing is I'm not known that well, but the guys that know me is because I want to be known to them, right? So, and again, it's by design, right? I don't do a whole lot of these calls. I hopped on out of a favor because Jeremy was there, and he's we built a relationship. Got into crypto. Why? I'm a cycles guy. I was expecting to get out of the loan business to go back into real estate. And that's when we did that 996 unit deal in Indianapolis. And it was a great deal. We got it right during COVID, got a great deal. I mean, we're getting $200 rent above pro forma. We estimated an exit on the sale of 160 mil. We're getting that now, and we're only about a third of the way through construction on the renovation. But I expected to see other deals, but that's not what happened. We only got a recession for 2 months. Guys, I'm telling you, I've been through this. I've been through this in '08. I've been through recessions. And not just talk about it. I've actually was doing this business. And what I expected to see was one of my degrees in economics and in game theory. So I understand market cycles, and it's one of my passions. I've got a lot of passions, as you can tell. Kind of like a Renaissance man, right? We'll go into more of those later if we have time. And my point was, I expected a big recession, didn't happen. So I said, well, then something has changed. And what changed is the amount of money they printed. They printed money before, but they didn't give it to the people. So it stayed in the banking system. So it's complex for me to understand, especially if you guys don't have a lot of macro. But what really happens is they're not printing money. They never printed money. They expand reserves, right? So as they expand reserves, it's kind of like, Jeremy, you got kids?
Yes, 3.
So you take one of your kids and you give them $1 million, but then you say, hey, listen, I'm going to give you the $1 million and you can borrow against it if you need it, but it's going to stay with me at the Federal Reserve. You can't go out and use this money. So in essence, that's money, but that's not really that's what really happens. But in the street, people say, oh, it's money printing. But what happened here that was different is the Treasury sent checks to people. So, and the banks got a whole bunch of money as well. So the banks expanded their balance sheet, but money was sent to people directly, which then caused asset prices to explode. And I don't see them coming back as long as this game continues. So once I saw that, what should have happened is the biggest recession we've ever seen in our lifetimes. That's what should have happened, right? Because you had an entire system shut down. But what you got was a minor recession and housing at all-time high, stocks at all-time high. So what was really happening is they're devaluing the currency. So it's not like a hyperinflation. The value of the dollar is going away, so you want to be in hard assets. And that's when we started learning about crypto, not because I want to learn about crypto. Again, I've done very well in real estate. Because the problem is the US dollar, I had to find another measure to measure everything against. Rather than measure US dollar, I said, what if I put up all the assets against the federal balance sheet growth? So if I took the Federal Reserve balance sheet growth and I put that against it, and I use that as my new ruler, forget the US dollar. And I put gold against that. I put real estate against that. I put crypto. I put stocks. The only things that outperformed the amount of Federal Reserve balance sheet expansion were 2 things and 2 things only that outperformed that. One was crypto and all its different assets. And the second one was the tech stocks, right? But the high flyers. So I said, well, what's going on is Metcalfe's law, right? The value in which one additional user benefits the whole ecosystem. So I said, I've got to go here because this is the only thing that's going to outdo the debacle that's going on. So this is very similar to what's happening in Venezuela or in Lebanon, where they devalue the currency and the stock market is an all-time highs if you measure the Bolivar. But what's really happening is if you put it against a real currency like gold or something else, where you denominate the currency, you see that everything is flat against it. And that's what's happening now. They're messing with the denominator. So it appears that things are going up in value, but that's not really what's happening. What's really happening is they're devaluing the dollar. So that led me to crypto. And then I just took the same real estate principles and I applied those to crypto. I want something that's going to be here long term. I need it to cash flow. I want to mitigate risk and look for good projects long term. So that's a long story short, about as short as possible, about me. and about us and about us working together.
No, that's a really good snapshot and very informative. And like you say, comparing it to real estate, I guess one of the main things you don't get that you get with real estate is probably depreciation. Other than that, you get depreciation. I guess you ain't got a loan unless you're leveraged. I don't think anyone would recommend doing that. So you're not getting debt pay down, but you're getting a lot of the other aspects of real estate. So
depreciation is nice to offset taxes, but with depreciation, guys, all of you guys, I'm going to assume you guys understand tax law. It's just a temporary punt. Yeah. Meaning all you still do those taxes. When you sell, we just sold our Atlanta deal. We owe a lot of money in recapture, sure, it's at a lower rate, but you're not really doing anything. And depreciation is nice, but if I have an asset, and I did this math, Jeremy, if I have a crypto asset and it cash flows and it goes up 10x, right? Which is, we've seen this happen, right? So it's not unrealistic. So you buy it at $1 and it goes up to $10. Well then, and you didn't lever up, you didn't get a loan, and you got to pay taxes at 37%. You're still up 7x, 6.5x. You know what? I don't know about you, but Jeremy, I'm a big fan of just paying the tax, and I'm up 6.5x unlevered. Guys, to do 6.5x unlevered in real estate, I'm going to say it's damn near impossible. 6.5x unlevered, which means that your asset would have to go up 6 times. And I'm talking about in a time frame of less than a year. Sometimes I've seen assets in the crypto world do a 10x in 90 days. And I don't mean going down the rabbit hole of assets. I mean assets like an avalanche just did that, right? So you don't have to go down the rabbit hole and find some no name and take on a high risk.
And but that's not even talking about the ways that you're able to borrow against the stuff that are coming out in DeFi now, where you can borrow against and not even sell your asset and borrow against it and not even have to pay it off. So that's probably another topic for another call. But
you can definitely do that.
So many things that's developing in this space that you can't hardly not take a serious look at it, even if you're skeptical and then the scams and all. But I guess the question I wanted to ask, how are you approaching the cash flow of real estate? Are you taking, so are you staking it and just taking the gains off of that?
I'm staking it. So there's a lot of ways to create cash flow during crypto. You can loan out your crypto like you would do in a regular traditional asset, right? You can take your Bitcoin and loan it out to, say, a BlockFi or Celsius or a crypto. There's a bunch of companies, that'll do that next. So, and in essence, you give them your crypto, they loan it out and they pay you back either US dollars or if you want to get paid out in that crypto, you can choose that. The problem with that is you actually give up your crypto. The crypto leaves your wallet, which is, I'm not saying it's right or wrong, just for me, it's not worth it. Like the risk isn't there. We knew each other, Jeremy, but I spoke at at Tim's event, Tim Broad's event on crypto, and when he asked me a question, he said, Ray, because he was real skeptical at first and like, isn't it a scam? And he goes, okay. And then once he got more interested, he sent me a text. He goes, okay, I know your style. I know how you roll. I know how you pivot. Tim and I have done a lot of business together. And he goes, Ray, what are you doing different? And it was a beautiful question. What are you doing different that none of these other guys are doing different with crypto? Because they're making it seem like it's just like a, get rich quick, a Ponzi, like there's not a. And I go, Tim, the one thing I do well that has allowed me to pivot, me and my wife to pivot throughout all these different businesses, is I risk manage. I risk manage better than anybody I know. And that's been, if I had to pick one thing that we do well that's allowed us to pivot, is risk manage, being able to manage risk. So for me on that point, the risk reward isn't there. And that's why we stopped doing real estate, because the risk reward wasn't there. So I had to become agnostic. I had to do more work, take on more leverage, less cash flow. And now I have tenants who could legally say to me, hey, I'm not going to pay you. Well, that to me, I needed a higher return to offset that risk. And I wasn't getting into real estate. It was more work. And I had to have more employees to collect rents now because I couldn't do it through traditional collecting means, right? That's what shifted. So in crypto, I think that risk reward doesn't make sense. Now, staking is a different way to earn tokens. So the tokens stay in your wallet, meaning you never give up possession of those tokens. And they pay you return for helping secure the network. So as you add value with your tokens to secure the network, they pay you a return for that. So the return could be anywhere from, and depending on which protocol, could be anywhere as low as 3-4% or as high as 200-300%, right? But it doesn't matter what the return is, right? So I'm not saying the return isn't important. This is a key concept. What you really want to find is a protocol that concept, that token is also going to go up in value. This is very similar to real estate. The cash flow during a deal just kind of helps you cover ends and make nuts meet and pay your investors. Where you really make the big pop is as cap rates compress, the values explode. That's where you really make the money. Well, the same thing is true with the token, guys. So I share a story of like when I first started investing in Cardano, which is one of the companies I've done a lot of homework in, the cash flow that comes out couldn't afford my lifestyle. But now the cash flow that comes out, because the token has gone up 10x, very easily covers my lifestyle. And I'm not stuck with it. Cardano, I can sell at any time. Other protocols require you to hold for a certain period of time, right? So you're not able to sell. So again, there's no right or wrong. It's what's right for you. But what I don't want you to do is get stuck in the game of this one's paying me 300%, this one's paying me 20%. Yeah, but what's 20% of a token that goes down in value, right? So understand that the game here is venture capital. This is not real estate. So I just use the cash flow to accumulate more of these tokens that I have in my hands. And if the market corrects, I get to have more of these tokens because I plan on holding long term.
Back to risk mitigation, are you just saying by getting out of real estate and into crypto, you're mitigating risk, or inside of crypto, you're mitigating risk by like taking your principal off the table once it triples or
everywhere,
some way
everywhere. The whole thing, right? Everything is a risk management. The reason I'm out of real estate is because on a risk adjusted basis, I cannot quantify being in real estate. The only reason I can quantify being in real estate is for tax benefits, and that's a shit deal. Because I've been there in 2007 when the shit goes sideways, and now you just lost real money. As much as I'm a fan of not paying taxes, I'd rather get the 10x and stay with the 7x and pay my taxes unlevered. And guys, live a great, remember, when I'm staking, there are no tenants. There is no bank. I didn't sign a PG or non-PG, which I don't know if you guys have ever been this, but I've been through this in 07. When you think that non-recourse loan is non-recourse, wait till you wait till you go in default and see how quick that bank tries to make that and invoke those bad boy provisions. Oh, he frauded us here. Oh, he frauded us there. Mm-hmm. Like non-recourse isn't really non-recourse. Yeah. I'm just not letting you guys know I've been there. I've been there when you got to turn the property back in. And I've been there when you got to tell your investors, hey, you lost a fuckload of money. And it isn't pretty. If I find a great deal that the risk reward makes sense, we'll look at it. But just right now, why would you bother looking at anywhere else? Like, why would you? And again, I'm not saying stop doing real estate, but I know multiple guys that initially were like, Ray, I got my hard money portfolio, Ray, I've got this, I've got that. And I go, start dabbling. And 6 months later, they're like, Ray, I'm into NFTs, I'm into this. He goes, I'm shutting down my whole real estate business, and or I'm selling it, and or I'm finding someone to fill me in and letting my partner run it, because over here, not only am I making more money, I'm making more time.
To somebody that's newer to this, what would you recommend? Which I know it's not financial advice, disclaimer, but to get started and start getting some cash flow. I know you're pretty heavy in Cardano, but what would that look like if somebody just said they wanted to buy some Cardano ADA and cash flow it? Like, are you doing that on Dallas, or what type of platform?
But in essence, you download the wallet Daedalus from daedalus.io, which is the Daedalus wallet for Cardano. You take your tokens off the exchange and send it to your wallet. Make sure that key phrase, you never give it to anybody else, right? Make sure you keep that and don't store on the computer. Mm-hmm. And then from there, you can hit delegate, and you can delegate your tokens. The tokens stay in your wallet, but in essence, you're delegating it to a stake pool operator. So in these different staking protocols, you can either run a node yourself, which is you can run the validator yourself, or you can delegate it to somebody else. Very similar in your world, where you can be the GP in the deal and you can do it all yourself and go raise capital and do all that stuff, or you could be a passive investor and have somebody else do that. I don't do that. I choose to be a passive investor and have somebody else do that. And I just look to then find the very best operator who's going to be always getting and minting rewards. So the worst case scenario here is you delegate your tokens to someone and they're a bad pool operator, meaning they're not efficient and they don't get any rewards, which means you don't get any rewards. I like this company called 1%. It's 1 PCT, and they have 28 pools, and I usually just make sure they have a green check mark.
You are pretty well all in on Cardano, is that right? That's what you told me in Orlando.
Pretty much. I'm pretty much Cardano. I've got a little bit of Hex, and I've got a couple other tokens here and there, but I'm just kind of playing with it. And again, I go deep in the. I like Hex. I like Cardano. Just very different risk rewards, guys. So just. Again, remember, I've got the other thing we're doing is we're trying to build out things in the ecosystem for Cardano. So I've hired a full-time developer, working on hiring a second one now. They're just hard to hire because they're so in demand and people are not overpaying. They're just, the good ones are hard to find. So we're paying pretty strong salary plus upside in the company. So we're developing dApps on the Cardano ecosystem. It's kind of like an app on your phone, but in that ecosystem, because that's where they want to develop on. So I'm more following their lead than, I was agnostic, right? know that game, but I asked questions. They're like, look, this is the best ecosystem that we want to develop on. And they have a lot of stake too, right? They go somewhere for time. So they're taking a lower salary to get more upside in the company, which to me shows me that commit, right? So, and again, it's all about risk management. I'm not, I see a lot of guys, at the event, I ask questions of like risk management. Okay, guys, why are you in this currency? What have you done to research protocol? How much of the network is stake? What's the circulating supply? What's the growth protocol of the system? So I'm asking questions like an investor would say if I was underwriting a multifamily deal. Hey, what's your break even on this? Hey, how have you stressed this deal? And then what I found is a lot of real estate guys, they just say, hey, I'm doing what this guy told me to do. Hey, this guy told me this. And I'm like, I'm damn well sure, Jeremy, you're not going to do a self-storage or mobile home park deal because some guy told you this is a good one to buy. Yeah. Right. So do your homework, guys. I'm a big fan of do your homework. Everything I'm sharing with you, I've done my homework on. And I've risk managed the crap out of this thing. I understand you got 3 kids, right? And I've got 2 of them. I'd be an idiot not to tell you that there's certain things about this one child that are great. And there's other things that I'd like to have some corrective behavior on. And they're all different. All I do is I risk manage and I tailor and I parent to each kid differently. Same thing I'm asking you guys to do with this crypto world. There is a lot of rug pulls. I've been around. I've lost money in exchanges. So it's not like it's all been sunshine and rainbows. I'm telling you from the stuff I learned. Make sure you are safely secure your passwords. Make sure you take shit off the exchanges. Guys, these exchanges go down and they take your currency. We lost a ton of Cardano in 2017. Utopia went down. So like this shit happens. It just hasn't happened lately, but it will happen again. I mean, Jeremy, you see it all the time.
Yeah. Just this past week, which it was somebody fishing and got someone's seed phrases and wiped out over 1 billion hex in emergency and staked it, paid out good to all the people staking hex. But yeah, somebody got wiped out.
Like an email come in and say, hey, we're doing KYC, and if you put your stuff in there, it sounds these scams are going to get more and more elaborate as crypto onboards more and more people. And the biggest thing I'll tell your audience is this is not going away. This is growing at 113% per year. That's twice as fast as the internet. In 4 years, everybody's going to be on here. Now, sure, you might have a cycle, but the cycles aren't a crypto thing. It's a human thing. It's what we do as humans. It's we over assume what this thing will do in the next year, but under assume what it's going to do in 10 years because we think linearly, not exponentially. The returns here in crypto are exponential. It's venture capital. And if you can't make that pivot from linear thinking, which is real estate, 3rd dimension, to 5th dimension thinking, which is non-tangible, more of a spiritual approach, if you can't make that shift, stay in real estate, right? But if you can and you see it, the risk management question then becomes, why are you not in it, right? The risk is in being out. There's more risk right now in you not being in this, even if it's just Bitcoin, than you being out, right? That's my biggest point here.
Yeah, that's kind of what hit me back probably February, March is like, I can, worst case, I'll put some money over here, and absolute worst case, I'll lose every bit of it. Or, alternative, I'll sit in the bank and earn nothing on it. Or I could 10x, 20x, 100x within a year, 2 years. So to me, it's like worth the risk. And now I've obviously learned a lot more about it in a year, but that's kind of the struggle I have is like, how much of your liquidity do you go in on that or keep buying deals and real estate or like trying to allocate?
That's going to be you guys and what your goals are and what your liquidity are and where you see risk reward, on a strictly mathematical risk reward basis. Forget the emotional side. And I'm not saying we're not like that, right? Because we have kids, we have families, we think emotionally, we have hobbies we like to do. But on a strict financial purpose, there's no reason to do anything else. If we just looked at it on just numbers. Yeah, just numbers. Now there's a whole bunch of, buying a house is silly looking at it at just numbers, but emotionally my wife wants one, I want to make her happy, so we buy the house, right? Like it's just, right? So it is what it is. So, but on a strictly mathematical risk reward basis, guys, you can earn on your cash 10 to 20% here. I mean, you just take your cash and put it in a bank on the crypto side and you can earn. So you don't have to even.
That's stable coins, right?
Right, in stable coins.
That's not even volatile. That's just fixed. Instead of holding it in a bank, you put it into a stable coin and
Yes.
make.
So in
10,
essence, what you
20%.
want to do is become what they call crypto native. You want to transition as many assets as you can into this crypto world of the liquid assets that you have, because you can always transition back. You're going to get a better return on this side of the world than you will on this side of the world, always. And you can always come back. So you can stay in stable coin and earn a solid return and then just pivot back.
Well,
it does require some education. And guys, there's no free lunch out here. They're paying you a higher return for a reason. So do your homework.
Well, right. One thing I've thought about putting all my cash or 80% or, being smart about it, but putting a lot over into just hold it there, liquid in a stable coin. But then that is kind of centralized, those stable coins, right? So it's a little bit in my mind, it's like, is that the risk of that, of a stable coin getting wiped out? Like, what is the risk of that in your mind? Is that?
I don't think it's a high risk. There's some stable coins that are better than others, but you're right, man. You're spot on. Stable coins have risk. They're not 100% audited. But then the other, but they're paying you for that risk, right? 8-10% they're paying you. But here's the risk that people aren't asking themselves. What is the risk of being in the US dollar in the traditional banking system?
Yeah, I know.
You and I both know FDIC's bank. I mean, you'd have to be special if you think you're going to get bailed out. Second, they're buying a bunch of treasury bonds. Third, your money's being devalued. So here, I can stay in the old system that I know I'm not really guaranteed, and I know I'm guaranteed to lose 15 to 20% per year. Or I can take a risk, potentially lose some of that capital, and potentially make 8 to 10% over here.
Yeah.
Here.
And some of those exchanges, even though they have some risk, like you say, having your money in the bank has risk too. Getting it out if something hits the fan is probably.
Well, look what happened in Cyprus. I mean, I know most of you guys study economic history. In Cyprus, you had a bail-in. I mean, like, they just kept your money. And right now these banks are buying Federal Reserve treasuries. They're being forced to buy this. So when you deposit money at your bank, that is their liability. It's your asset. Have you ever gone to the bank and try and get 20, 30 grand out cash? Good luck with that.
Yeah.
They don't have the money. And 20, 30 grand is not a lot of money.
Yeah. Isn't some of these exchanges that you can hold stable coins in, don't they have kind of like the banking world has FDIC insurance? Isn't there some stuff like that up to 500, 700,000 that they offer?
I think it might be 200 or 300. I mean, if some of them are FDIC, might be the FDIC limit, but dude, some of these banks that are like the crypto banks, dude, there's so much demand for that. Because remember, it's not just guys like us. Big institutions, dude, they would love to earn 6% on something. Are you kidding me?
Yeah.
Right? I mean, it's like 100 times better than the bank.
That would double their earnings. Some of them.
I mean, a couple of these banks, like a couple of banks, I forget the name, but I've tried to open accounts, $1 million minimums, no customer service. They're so overloaded with business that you're not really getting a call back. So your best bet is kind of like a BlockFi or Celsius or an EXO, and maybe split it out, right? If you want to take that risk. Or, the other thought is kind of what you and I talked about is, you know what? I'd rather forget it. I'm not going to earn 8-10%. I'm going to go for the 1,000%. I'm going to go for the 2,000, 3,000%.
Yeah.
And just go into the currencies. And a lot of guys do. So you can risk manage and allocate according to your risk tolerances, which is what you really should do. Do your homework.
The biggest thing is that I think my thoughts is just do something in it. Just even if it's $1,000, just get familiar with wiring money, converting it over, taking it from an exchange to a private wallet, do some staking and just get your feet wet. Don't go, you expect it to be at raised level, the first month, but you're 4 or 5 years into the game, and where will you be, a couple years from now if you don't get started?
Guys, I'm 1 year into the game.
1 year. Okay.
1 year, but I stopped doing everything else. So it allowed me to go in here fast, and I spend half my day learning and half my day being called an idiot by my developers, right? Like who is this guy? You know what I mean? Yeah. But luckily they keep me around because I keep funding them. You know what I mean?
Yeah. Funny how that works.
Yeah. But again, it's an education firm, right? So you can pay for education, or you can learn the hard way, or both, which is what I choose to do, right? I learn through videos and YouTube and making mistakes, and I also learn by paying other people, which is ultimately where you want to be. And guys, this knowledge compounds on itself, and if you start making money and start really seeing how you can make money with a lot less effort as you could in the traditional world, you start to pay more attention to it.
Yeah.
I got a question about the cash flow. So I'm learning, with Hex on the staking and earning the cash flow.
Yep.
I'm not fully aware, but I think the cash flow you get on Hex, you're not actually getting paid out per month. You're just gaining more Hex, which is your return, but you can't really cash it in until a later point, I think. I was curious on how that differs from Cardano.
Hex is not Cardano, and Cardano is not Hex. Cardano is looking to build a whole new financial ecosystem, a whole new parallel financial ecosystem, which involves identity, involves voting, involves, right? We can't bank the unbanked if we don't give them identity, right? So Cardano is fully decentralized, right? Way different. Hex is building a simple banking product, the CD of the banking, right? Hex is fully centralized, right? So you need to ask yourself, do you believe the future of the world is going to be centralized or decentralized? Now, I have bets on both, but I believe long-term, future is decentralized, right? Hex is centralized. And in Hex, you're supposed to be, the risk reward of Hex is you're supposed to make a higher return for the longer you stake. But understand in Hex, you don't have those tokens. So you're taking on more risk. Those tokens aren't in your wallet in Hex. Once you stake, they're not in your wallet. You understand that, right? You gave up whatever you give up, and it's in that system. I'm not saying it's right or wrong. I'm just saying understand that risk. You follow me? And the longer you stake, the bigger you stake, the more T-shares you get. The more T-shares you get, the more you're supposed to make in return. Hex is designed to pump. By definition, when something is designed to pump, and I'm a big fan of the pump, it will also dump hard. It's just the mechanics of it. You can't have one without the other. You know what I mean? So if you want something to pump hard, it's going to dump hard, as you've seen.
Yes, it's doing it right now.
Yeah, it's doing it right now. And then and not just that, I am not 100% certain. If you asked me, hey, Ray, if you had two investments and which one are you certain, which one are you more certain is going to be here 15 years from now? Well, shit, I'm going to go with Cardano all day long. Why? Because they have real use case. They have adopted the country of Georgia. They're creating identity. They've got 20 different projects they're working on. They've got 300 different employees. They've got different partnerships. They partner with Dish Network. They partner with Boost Mobile, right? There's real world use case. Hex is a way for us to pump our backs, which I'm a fan of. I mean, I like nice things. My wife likes nice things, and we like abundance. But it's certainly, that's why Hex is a much lower position in our portfolio than say Cardano, because I understand the risks. And I can go way deeper into what and how are the issues with Hex and what and how are the brilliances, because Hex has got some things that are magical. There's a lot of shit that I see most guys have no idea what it really works. And if they understood how that really works, they would risk manage better. Staking in Hex is not like staking in other ecosystems. Staking in Hex, you lose control of those tokens. They are no longer in your MetaMask wallet.
Is that why you say it's centralized?
No. The reason I say it's centralized is, I'll ask your listeners a question. A very simple question. How much Hex does Richard Hart, the founder of Hex, control?
Well, I think there's a lot of assumptions, but I don't think he's
no assumptions. There's audits.
Is there? Okay. Well, there's one, the OEM address or whatever is holding so much, and has he owned up to being that person?
He's never going to do it. He owns 87%.
But over 51% of control and majority is what you're considering centralized. Anything over that, right?
There's degrees to centralization. There's degrees of decentralization. Cardano is 100% decentralized, meaning the community, the validators own the network. The validators choose what they want to happen on the ecosystem. Okay. Here, you're relying on Richard. You're relying on Richard to do the right thing and play right.
Just like you're relying on an exchange that has admin keys, or that you don't have, that you don't own your keys to do the right thing.
Richard could sync Hex right now.
Yeah.
He could sell. Now, again, would it be silly for him to do so? Sure. It's kind of like you and I saying, hey, we're going to go choke out our kids. No, we wouldn't do that, right? Yeah. But if shit got bad, or if he got in a bad situation, could he do it? Yeah. In Cardano, he couldn't do it. Does that make sense?
Yeah.
Like he physically could not do it. He could sell all his shares, but even if the founder sold all his shares, it wouldn't affect market price substantially, because you got 1.5 billion that trades in a day. You know how much Hex trades in a day? 30 million. Guys, if we all sold Hex right now, price goes to zero.
In fairness, any coin that's everything sells a day goes to zero, right? Or stock or anything.
Well, no. In Cardano, you've got 1.5 billion of trading volume that you could sell in one day before you affect price. 1.5 billion, yeah? Okay, in Hex, it's 30 million. Do you see the difference?
Yeah.
The liquidity is so small in Hex that, yeah, price pumps when someone comes in with a $500,000 in Hex, price pumps. But you got someone selling a few $1 million. Again, remember, I just said at the beginning, Hex is designed to pump. This is what people don't do well in the crypto space. I'm not saying Hex is right or wrong. I'm saying understand how the damn thing works.
Yeah.
You see how well I understand how the mechanics of the system work? Now, there's some beauty to it because the way he designed T-shares and the longer you stake and the way he game theorized that and people exit. But make no mistake about it. In Cardano, 72% of the network is staked, meaning 72% of everybody says, no, hey, we're here long term. We're going to stake the network. We're not selling. Good luck. In Hex, any guesses on what that is?
I don't know.
10%.
10%.
That means 90% of the people are saying, no, I'm just going to hold Hex.
Yeah, but I've heard Richard talk a lot about him owning the 87%, and he don't stake to provide more yield for the ones that is staking, which is kind of propping that up. Because if he stakes and that pulls down if he stakes 87%, then your 35 to 40% you're getting now goes to probably 8 or something. So
I'm with you. I get it.
But no, like you're saying, know what you're getting.
Right. But now again, did I get into this to depend on Richard, or did I get into this to add real use case and utility to the one to make a difference? Right? Like, I'm not saying there's a right or wrong. And again, I'm in both, but you're going to tell me, hey, you know what? I'm not staking my coins because I want to give you a higher return. Yeah. Well, what are you doing with all the ETH you got? Why don't you give me a clear answer to that? Every time that we're buying something, it's if he controls 87%, he's providing all the liquidity. I just want to, give it to me straight. I'm a big boy. I can take it. But give me a clear answer when I ask you a clear question. Hey, what are you doing with all the ETH and all the money you got when I give you this Hex? Because remember, guys, when you stake Hex, that is no longer in your wallet. You all do understand that.
Yes. Yeah, it leaves and then it comes back.
So you're taking on more risk. So the return has to be higher. And then remember, guys, all of you own real estate. I'll give you a real simple example. And I don't know why I didn't think about this earlier. If there's only 15 to 20 million liquidity or 30 million liquidity in a day per Hex, think about it like this. Let's say you guys own a bunch of apartment buildings in a certain city. Well, a whole bunch of other owners say, hey, you know what? We're going to clear house and we're going to have a whole bunch of vacancies. So now you want to fill your vacancies, but they just put a whole bunch to market. What happens to price? What happens to rents?
Yeah, it goes down.
Hard, right?
Yep.
Same is true in the inverse, right? There's very little, right? Price goes up, right?
Yep.
Same thing is here with Hex. The liquidity is so small that if a few guys decide to sell, price goes down. Now we're just talking about rents, but now let's really talk about what really matters is when you want to make that return. Because in Hex, you're foregoing liquidity because you can't sell when you want to sell because you're staked for future return. So, hey, I'm up 10x on Hex. I'm up 10x on Hex. All right, let's have a party. You're only up 10x if you can get out. If everybody's trying to sell, not everybody, guys. Remember, Hex has billions. I'm saying if a few guys want to get out, guys, $30 million in Hex is not a lot of Hex. If a few guys want out, when you want out, you're not getting out.
I think a lot of people here understands the staking of Hex and the time, the longer pays better, but you on Cardano, I don't have any stake Cardano, so I'm going to learn from this as well. Like you put it in Dallas and then you stake it or let them do the liquidity or whatever they do with it. Is that?
It's not liquidity. So it's not liquidity, man. You're staking it, so you're adding value to the network, but you can sell anytime and you can take your token up anytime, right? So that's and it pays every 5 days after the first 20 days setup period or first 20 days to sync to the blockchain.
All right, so let's just say I had $100,000. I'm all in on Cardano. I want to put $100,000 in, buy it, whatever, or maybe a dollar cost average in. But I get so many coins and I stake them all. What could I expect? Like, so you're saying after 20 days, I'm not locking it up for a period of time for more yield. What is the yield on some? What
it's going to be 4 to 6% per year. paid out every 5 days. Remember what I said, it's the value of the token goes up. So right now, again, I manage risk. Right now, weirdly enough, the lowest risk coins in the top 20 market cap, in my opinion, is Cardano and Hex. If I had 100 grand myself, I'd do 100% Cardano right now. Just given where it's at, given how much the negative crap that it's got, it's really undervalued for what they have going. They've already launched smart contracts. You just don't see it yet because the food is back in integration, which is kind of like, let's it release. They're doing it slowly over time so they can test. They're very methodical the way they do things. But when it pumps, and again, don't focus so much, guys. This is the hardest thing I have with real estate investors to understand. They're so focused on percent returns. Guys, okay, Hex pays at 38%. Yeah, but if you bought it at 50 cents and now you're at 17, does it fucking matter? So you're getting a lot of interest rate paid, but they just cut your value in half. You're actually still losing money. Do you follow me, guys? Like it's don't get so caught up on what interest rates you're earning on the tokens. Focus on the value of the tokens. Does that make sense? Because if Cardano's paying you 5%, but the token 10x's, it's going to outperform anything you've ever seen before. You're just getting extra cash flow. And remember, guys, I have to risk it. I manage money for funds and family offices. When I talk to my board, I talk to my financial advisors, I have to risk manage. So they're going to ask me, well, what's the risk adjusted return? They're always going to risk it. I can't say, hey, I have Hex on this side. No, Hex is a much higher risk, so I've got to get a higher return for that. Whereas with Cardano, I don't have counterparty risk here. It stays in your wallet. You're not trusting somebody else. And you're earning interest on that in Cardano, meaning no one pays you in the US dollar. They pay you in more Cardano tokens. And then if you don't sell those tokens, you get to earn interest on that. And it compounds and it gets paid every 5 days. And I can sell anytime. And by the way, I can borrow against Cardano. Good luck borrowing against Hex. Why can't you borrow against your Hex? Because A, it's not in your wallet, and B, there isn't a real exchange that'll take it as collateral. Oh, because Hex is gate kept. Oh, because Hex is the red-headed stepchild. Man, come on, man. Come on. Come on, man.
I didn't say that.
Come on, but
I know where you're going.
Yeah, but I'll get guys that are like, come on. No, but Hex is a finished product. Dude, I'm not a finished product. We're in a technology business, and that's what you're telling me? Hex is a finished product? Okay, well, then why the fuck is he doing Pulse? Why is he launching PHEX? No, but it's a finished product. No, it's not.
Let me ask you this on Cardano. Can you earn yield and do the staking aspect if you like on cold storage? Can you take your coins on cold storage and still?
Yeah, 100%. So you can take it to a Trezor and take it offline, or you can buy a separate computer, run data on a separate computer, and just when you're not tied to the internet, just take it off the internet. Yeah, you can do it on cold storage. Do you see all these benefits that I'm talking about that for me as a risk manager, I have to look at, I have to consider? Whereas your Hex, you're stuck with it dataless. It's a hot wallet.
Yeah, I think it's smart. And that's why, a lot of people in Hex, but it's good to hear a different opinion on anything. I mean, we say none of it's perfect, but guys, I say diversification. Don't have all your eggs in one basket. Have some high risk, some medium, and some low risk.
What I'm saying is, what guys aren't that's exactly, if that's the message, that's exactly what I want them to take. What I'm saying is they don't know what those risks are, so they're making
what you're doing.
Yeah,
don't
they're
just
making
do it
bets like, hey,
I said it.
Hey, I'm buying a multifamily deal in the A area and an A asset, and I'm going to compare it to a rooming house in a D neighborhood, and I want the same return on both.
Yeah.
That's not risk. That's not proper. So understand what you're getting into. I'm not saying one is right, one is wrong. I'm just saying the risk levels are different. So you should be able to manage your investments according to your risk tolerances and what you want to risk or not.
Yeah, and I think that's key because everybody wants the easy button and just, Ray said Cardano, so I'm all in on Cardano.
I'm not that guy. I'm not that guy. Yeah, I'm the guy that tells you do your homework, don't listen to what I gotta say, and make sure this fits your lifestyle. A lot of guys want to trade or do this. I'm like, Ray, what do you think I should do? I'm like,
hey, there's a lot of guys in there that's young too and not married and don't have kids, and their risk tolerance is way more than mine and yours with a teenager and all that type of stuff. So again, there's the cool thing about crypto is there's something for you no matter what. Like if you want to gamble, I mean there's the shitcoin stuff,
Yep.
That's gambling. So
and dude, who knows about the shitcoin? I don't know if Shiba or one of these tokens is going to be a shit coin. I don't know. Like maybe there's a real use case for it. Like guys, we're so early that no one really knows. So my risk concerns could be very off on Hex, and Hex could go 1,000x, but I still have to manage risk given what I know today. And if I don't manage risk, that's where I've learned from 07, 08, what got me into trouble was lack of proper risk management, because everything else I risk managed really well. And the reason we went through that cycle is because of risk management.
Man, I know I learned some stuff here. Hopefully this was a big help to the group and added some value. We got a few minutes here, so I want to start wrapping up here, but maybe if there's one last thing you want to leave with the group, or any advice or books or anything like that. I know you mentioned your podcast. I've listened to that a lot in the past, so I highly recommend that. Just a lot of mindset stuff and entrepreneurial type stuff. And I think anyone here that works with your spouse would take a lot from it as well. You guys talk a lot about your journey there as well. And a lot about kind of that lifestyle by design, which, we talk a lot about as well, is what do you want and what do you not want, and those type of things. So highly recommend that. But I'm going to leave us with some closing thoughts.
Guys, get off zero, do your homework. It's worth the time. It's worth the time to stop what you're doing. And guys, a video a day, 2 videos. I mean, I'm doing 4 or 5 because I wanted to catch up to my text, and not in the technical knowledge, but understand the space. And then find 3 or 4 investments you like, and then risk manage. And what I told people on the stage was that the biggest mistakes I see is people leaving money in exchanges, not risk managing. And then part of not risk managing, this is going to sound the opposite of what I'm saying, but it's really part of risk management, is what I would do if I had to start all over again. I would take as much money as I'm comfortable with of my liquid net worth, whatever that is, to put into the space. And then initially I would double it. This space moves. This is not like real estate. This space moves very, very fast. I'm sure if you ask Jeremy, if you were able to buy, if you had to go back and buy what you knew you could have bought, would you have bought more? The answer on an investor who's been in the space for over a year has never been no. The answer has been, why didn't I buy more sooner? Guys, make sure that the investment in here is meaningful to you guys and ladies, meaning that if you win, that you win nice. Sure, investing $1,000 is nice, but dude, if you're worth $1 million, $1,000 at 10x is not worth your time. Stick to real estate. Like if that's all you're gonna do now, it's something you want to get off zero. But what I'm saying is, like, one of the things that we did good this time was, and it was risky at the time, is you want to size this up properly so that it's meaningful to you. So that it's what a good friend of mine calls life changing money. And what he means by that is that your wife treats you better, right? So that's
where she leaves. It's so good she leaves, or that kind of good, or treats you so good she leaves, or what are we talking?
so good that you don't want to leave, right? So just make sure it's meaningful, guys. Make sure that it makes a difference. Whatever. And again, that's going to be different to everybody, but like that's what I mean meaningful. That it's. I see a lot of guys get invested, and they take small bets, and it's like, and by the time they actually look to make a meaningful investment, the prices run up 10x, and then they don't make an additional investment. So I'm not saying don't dollar cost average, but really make sure that initial investment has your attention and is meaningful to you. Does that make sense?
Yeah, it does. And I think on the wife thing, they'll make it, that always, it's either like A or B. I'm married for love and I'm married for money, or vice versa. But why get mine married for love, obviously, up till now. So do it where they married you. Got the money side of it as well in the love. So that's good.
Yeah. And what's nice about this whole thing is the biggest benefit on this, on the spiritual side, it's opened up so much. And I know that you're a spiritual path. I'll leave you with that, is once guys, we get off, and ladies, we get off, and the ladies, for some reason, I got to give a shout out to my ladies. The ladies with the feminine energy, I don't know, I just got chills. They do such a better job of understanding this, because they're not caught up with all the BS that we are as men, of overanalyzing. I don't know what it is about the feminine energy, but dude, the women I've had have done so much better than the men. They execute well. They don't overthink. They get this. Like, I guess it's a motherly instinct. They're like, this is so much better than the other system. But once you guys start to make some investments and you see how you can make money in a different kind of way and make cash flow in a different kind of way, it starts to free up your time. And then you start to get conscious, and you're like, dude, do I really want to take more time and make more money and make whatever I'm going to make and spend more time here? Or do I want to connect with my wife? Or do I want to connect with God? Or do I want to connect with the Holy Spirit and really open up and really, because guys, the truth is, an extra $1 million here isn't going to change your life. and it isn't going to get you out of your own anxiety or your own mental stuff. Like that only is healed through meditation, and those.
In some cases, it makes it worse. I would say.
You know, Mark Evans and I talked about that specifically. In most cases, it makes it worse because what you think was going to fix you, quote unquote, because you're not broken, but what you think was going to fix you, now you know it doesn't, and it makes it worse. So now the drinking, or fit your escape here, the drinking, the alcohol, the weed, whatever it is we do, guys, the healing of the soul can only come through the Holy Spirit. The healing of the soul, only the love of God is going to heal your soul. Yeah. And I've talked to guys that have billions, that have a fleet of jets, that have a fleet of elephants, that have a fleet of giraffes. That's what my son name for, giraffes, whatever it is. Once you get to that place, then you can't see the world the same way. And this crypto is a nice transition to do that, because it gives you the time and space to then take the time to meditate, take the time to connect, take the time to open up and have the Holy Spirit heal all these things inside you.
Yeah. That's good, man. It's going to be hard to find a higher note to leave on than that. So again, thank you for your time, and look forward to seeing you down the road. But like I said, I appreciate your time. That's very, very solid of you to get on here and talk with us today. So wish you the best. And I'll share that email as well. You got the YouTube in here, both on board, and get some emails over to subscribe to your.
Yeah, I'll send you. Send me an email, and I'll send you the email, all the email stuff, and you can send out to them and kind of help them out.
Perfect. Okay. Have a great day, man.
I appreciate you guys.